Ladies and gentlemen, please take your seats. Our program is about to begin. أيها السيدات والسادة، سيبدأ البرنامج بعد قليل، لذا نرجو منكم التكرم بالجلوس في مقاعدكم.
Ladies and gentlemen, please silence your phones. Our program is about to begin.
Hello, everybody. Good afternoon. Welcome to another day. I bet you're excited for the weekend, huh? After this long week, right? Before I introduce the moderator and the speaker, I'd like to remind everybody that drinks and food are not allowed in this auditorium. And when you leave, please take everything with you. Don't leave anything behind. And since you guys liked the moderator yesterday so much, we decided to bring him back again. So Dr. Jin Gao, just a little bit more information about him. Prior to joining KAUST, he was a Lane Fellow at the Lane Center for Computational Biology in the School of Computer Science at Carnegie Mellon University. In 2004, he earned his bachelor degree in computer science from Tsinghua University and his PhD in computer science in 2009 from the University of Waterloo. Please join me in welcoming Professor Gao.
Thank you. So I hope that you are not yet tired of seeing me again and again. But whenever I show up here, that means we have a very, very important speaker to be introduced. So it is my great honor and pleasure to introduce today's keynote speaker, actually a long-expected keynote speaker, Dr. Eric Li. So Dr. Li is a Chinese venture capitalist and political scientist. He has a stunning background. He received his bachelor in economics from UC Berkeley and his MBA from Stanford. And he also holds a PhD in political science from Fudan University in China. So in the year of 2000, Eric returned to China and established a very famous Chengwei Capital, an evergreen venture capital fund headquartered in Shanghai with a cumulative investment portfolio of over $3 billion US. And 10 years after that, he founded Guancha.net, a digital news platform, actually one of China's largest news and opinion medias. So he is very well established and very well recognized all over the world. He serves on the board of directors of China-Europe International Business School, the board of Stanford University Graduate School of Business, and the Freeman Spokane Institute. He is a trustee of Fudan University's China Institute, a trustee of the Berkeley Art Museum and Pacific Film Archive of the UC Berkeley, a trustee of the San Francisco Symphony, and a trustee of Asia Society Hong Kong. So he just arrived this morning specifically to deliver this keynote speech at KAUST. So we are very grateful for him to travel this long to give this keynote speech. Let's welcome Dr. Li.
Good afternoon. It's an honor for me to be here at KAUST. I realize I'm not one of you. You're all studying science and engineering. And I know that lecturers you've had here have all been leading scientists. But I'm a finance worker. And this particular distinction is where I would like to begin. There's a lot of pessimism going around the world now. We all know this, and there are certainly a lot of reasons for that. But standing here with you, I find at least one source for optimism. Now, decades ago, when I was a university student like you, the best and the brightest of my generation and the following ones went into finance. I wasn't one of the best and the brightest, at least not at that time anyways, but I certainly followed the best and the brightest. I got my MBA and I went into finance, even though the universities I was at had the best science and engineering on offer. But who wants that? I remember even some of the best math and physics students amongst us dreamed of going to Wall Street and be a quant there. I hope none of you have that plan in mind. That would be a disappointment. Now, has the world been better served by that phenomenon? I doubt that very much. I now read in the news that it is becoming increasingly difficult for MBAs to find jobs with exorbitant pays. I think that is not a bad thing. I should ask them to edit this part out when they post this online. I don't want to offend my own kind. So this is where I would like to begin, okay? And this has a lot to do with the economy, the economic environment of my country and the global economy. So what's happening around the world today? In 2023, here are the headlines. Okay, if you turn on TV, you read paper, the Chinese economy is in trouble because we got real estate collapsing, our big techs are being busted, raining the big techs, and the state is taking over the market. Private capital being choked, and we got COVID hangover. Okay, this is the news headlines. And the world is in trouble because deglobalization is happening. In the last 30 years, we've had this amazing run of globalization, and it's now being reversed around the world, okay? And that leads to fragmentation of the global supply chain. As a result, there's a long global slowdown in growth. I think either World Bank or IMF just had new numbers out yesterday showing the global slowdown, economic slowdown will last for some time. And of course, we got conflicts around the world. Okay, so a lot of pessimism going around. And I'd like to put that in the context of the largest economy in the world, China's, or second largest, depending on how you count. But it's the most significant economy and most integrated economy in the world, and what is happening in the Chinese economy, okay? And I've come up with this concept called the 220 years of the Chinese new economy. The first 20 years, of course, is from 2000 to 2020. 2000 is when we joined the WTO and went on to become the biggest manufacturing power in the world, okay? So if you look at the first 20 years of the Chinese economy, there are 4 drivers for our economy, okay? The first 3 are market economy. The last one is done by the government. So I'm going to focus on the first 3. The first big driver, first pillar, is the rise of the consumer internet platforms. You know these companies. We produced the biggest consumer internet market in the world, the Alibabas, the Tencents, the WeChats, the games, and we got the growth of the big techs. So if you look around the world, the big tech companies, they're either American or Chinese, okay? And they are about equal in market value, market share, revenues, and what have you. So the biggest big tech market in the world. Second is the building of industrial capacity and the global supply chain. Okay? So China, after we joined the WTO from 2000 on, in 20 years, in one generation, we built the largest industrial capacity in the world, which is about 30% of the world's total. And China became the largest trading nation in the world, and in history, in human history, the biggest trading nation, okay? Then we have this huge real estate behemoth, enormous commercial developers with heavy bank debts became a pillar of the economy. Real estate accounts for almost 1/3 of our GDP. Big. Okay. The fourth one is done by the government, infrastructure build out, and then we have limited industrial and technological upgrades. Okay, high-speed rail, I don't know how many of you have been to China? A few, not too many, so you should come, okay? So we got this enormous high-speed rail network in China, which changed the face of the country and changed the economic structure of the country. For instance, alternative energy, we're at the forefront. 5G network, China's at the forefront. But these are mainly led by the government, some private sector companies, okay? So that 20 years essentially summarized my venture capital career. Okay? So now we're at a juncture. I think we're at the beginning of the second 20 years. And why is this happening? The first 20 years, we had huge accomplishments. I just summarized them, okay? But we also have big problems, okay? So these internet platform companies, the ones that I've mentioned, the ones I'm sure some of you have heard of, and a lot of them we venture capitalists have invested in and made a lot of money out of. These are winner-take-all businesses. Okay, so in other words, when they win, they become monopolies or monopolistic in their behavior. And most of them are business model innovations. Okay, they're not truly technology innovations. Okay, if you look at our e-commerce companies, right? Look at social media companies. Very few of them had actual hard technology innovations, the kind of stuff that you guys are studying. Okay? The QR code, for instance, which is ubiquitous in China now, which changed all of our lives. That was invented in the 80s or 90s, I forget, long time ago, nothing new. Okay? So, but it was used to change the face of change the economic, how commerce is done, how people make friends, how we conduct our lives and businesses. Okay, and when you have the business model innovations are amazing and create a lot of wealth and also create some net value. But most business model innovations also lead to losers. They're also wealth transfer. Right? For instance, e-commerce replaced a lot of mom and pop shops, so they're losers. Okay, and like I said, they have low level of technological innovation. Then our industrial capacity, the big manufacturing power that I talk about, actually had fairly low value add in the global value chain. I'll talk about that a little bit more, okay? So what do we have? We got, in big tech, we have monopoly, and this is another interesting about big tech. They're both monopolies and monopsonies. Do you know the difference? So monopoly is downward monopoly, okay? So a seller's monopoly. So you have only one supermarket. So you're screwed, right? Whatever they charge, you have to pay them, okay? Monopsony is upward monopoly. So you're the only buyer in the market. Then the suppliers are screwed too. Okay, so monopsony, these big tech platforms are monopsonies too. They're so big, they're the only buyer from upstream suppliers, including labor. Okay, so we got a lot of these delivery platforms, the delivery platforms, huge. They pay nothing for the driver's health care insurance, for instance. Okay, why? Because they don't care. They have nowhere to go. Monopsony. Okay, so all these things produce what economists call negative externalities. Okay, so in economics, there's a concept called positive externalities and negative externalities. Positive externalities are value that you create in the process of doing your business that's positive for society. Okay, so you have a company, you build a park next to it, it's positive externality. Negative externality is like what I said, you run a business just because you can get away with it, you pay no health insurance, and your drivers get into an accident, who has to pay for it? The government. Because they get into the emergency room, they get treated for free. Okay, that's a negative externality. Okay, so society shoulders the costs that your business generates. Okay, so a lot of negative externalities out of these monopolies and monopsonies. And because it's so easy to make so much money out of these monopolies, there's an underinvestment in actual technology, in the stuff that you're studying. Okay, so we have technological stagnation for 15, 20 years, to some degree. We have some breakthroughs, but mostly, okay, for instance, semiconductors, or in manufacturing technology, okay? And of course, it leads to concentration of wealth. So inequality has become a big problem in our country, and environmental degradation. So when you have large manufacturing power, of course, it damages the environment, okay? So this one chart sums up our problem. So in economics, there's a concept called total factor productivity. It's a simple concept, how much input you put in and how much output you produce. Total factor productivity. If you look at the Chinese economy, although our economy's been growing like crazy for 20, 30 years, but by around, the mid-20 teens, our total factor productivity has stopped improving. Yeah. We're still growing in size, but we're not getting more productive. Why? Because there isn't enough technological innovation that enable more productive activities. Okay, so we're just throwing bodies at things, right? So what are we going to do about it? So around 2020, I think China and its leadership has made a decision that in order to grow further, to get out, and in order not to get into what economists termed called middle income trap. There's a term called middle income trap. It's countries, you get low hanging fruits, you grow, you become prosperous, but you're stuck at middle income. You can't grow further. You can't get better. Okay, so they got to get out of that. And how do we get out of that? That the country's leadership had decided that they wanted to engineer a paradigm shift, a top-down restructuring of the world's largest economy from the supply side. Okay, so what is this restructuring? What is paradigm shift about? One, to develop technologies to raise the productivities of our manufacturing sectors, of our industrial capacity, okay, and focus on the real economy, not finance, not property, okay, the real economy, and to drive transformation, upgrade of traditional industries so that they don't stay and become low-end industries. Okay. And more important, in fact, is to jumpstart entirely new industries that are created by technological innovations on day one. Okay, we'll talk some more of that. And all of that are related to what you're studying, okay, what this university is about. So industrial capacity, I want to talk about that a little bit more. So in this era of global competition, China's biggest asset is our industrial base. Okay. China's industrial capacity is bigger than the US, Japan, and Germany put together. Okay. I was boarding a plane from Riyadh to here this morning, and then at the gate, the guy said, "Are you from China?" I said, "Yes." He said, "I'm starting a business on the side and to import office chairs that are made in China and sell them here." Okay, industrial capacity, right? No country is making these office chairs, only China is, right? So our industrial capacity is about 5 to 10 trillion US dollars a year in value. Enormous number, bigger than countries, most countries, okay? But our value add of that industrial capacity is still relatively low, at about 12%. So if you know something about business, microeconomics, if you take a company, right, a company has revenue, and then they have profits, okay? And in between, they have a thing called gross margin, gross profit. Gross profit is the direct cost of what you're making, okay? So if we look at that 5 to 10 trillion dollars a year as our country's industrial capacity's revenue, then the 12% would be our gross margin, which is not that high, right? If you look at, show you what the potential is. If you look at the US, the United States, it's no longer an industrial power, okay? They deindustrialized, they don't make anything. But when the US was at the height of its industrial power in the 1970s, the gross margin of their industrial capacity was 35 to 40%. Huge. Okay, so it's that 30 percentage point gap on the denominator of 5 to 10 trillion US dollars. That is the money that Chinese economy needs to make in the next 20 years. Think about how big that is, okay? And how do we do that? The only way, we can't throw bodies at it. We can't grow size. The only way to do that is to inject technology into our industrial capacity to raise the value, okay? I give you a quick example. We have a company that makes quality assurance systems, okay? Very expensive equipment on the industrial process, on manufacturing process. Chinese companies used to buy this from the hidden champions that dominate this industry. All of them are German or Japanese, all of them, okay? And these products sell at 70, 80% gross margin, okay? Very expensive. So, and these products have fallen behind on technology for various reasons. So now there are Chinese companies, there are innovative companies developing new products that to be sold into Chinese manufacturing companies. And that will be the margin that Chinese economy will capture, okay? So, I talk about the iPhone story. Okay? So almost all iPhones are made in China. Okay? So 10 years ago, when Apple decided to make the iPhone in China, it's a $1,000 product, right? China kept 3.5%. Okay. 10 years later, today, that's gone up to 26%. Okay, huge improvement. Now, if we made the semiconductor chips in there, it would be 65%. Okay, maybe we will. Okay, that's the kind of stuff that we need to be doing. I don't know. I don't know. Does KAUST have an integrated circuit major? We do. We don't. Okay, you should start one. Okay, so so we need to repeat the iPhone story in every sector. Imagine how much value our economy could create with technology, okay, with science. So I've been giving this talk called The Chinese Economy, the Sequel. Okay, this is the sequel that we're talking about. Old growth drivers, real estate, consumer internet platforms, and low-end manufacturing. And this is, a couple of economists developed this thing called the SMILE curve. Okay, it shows the value add of the country. So PRC, see how that big, USA, there's comparable size. Okay, we're a little bigger than them. We used to be the size of Vietnam, that little spot, okay? But we've grown in the last 20, 30 years to this huge behemoth of an economy. Yet, our position on the SMILE curve didn't move, which means our value add didn't go up very much. We just grew revenue without growing profit margin, if you put it simply, okay? So what we need to do is to find new growth drivers. These are technology, I call it technology-enabled industrial capacity and supply chain. And then the new energy, new materials, life sciences, these new industries that are powered by technology on day one. To do what? To move this big ball, this Chinese economy, upper left on this SMILE curve, which means we're not only growing in size, but we're growing in margin, in value add. Okay, this is what the Chinese economy is headed, and I'll tell you why that's relevant to the world. Okay. So, I want to give you a few examples. I'm a venture capitalist, so these are the examples I live in every day. These are my own companies. Okay, I have other people's companies. Okay, so agriculture has become industrialized. Okay, so it's the same thing as industrial capacity. So we got this company that uses drone technology to revolutionize farming, agriculture. Okay, I'll show you. Drone technology, revolutionize farming. We don't need people anymore. Okay? Manufacturing technology. This is a startup company we started a couple years ago. AI welding. Okay, so I know Saudi Arabia. I come here. I'm like, this is Pudong 20 years ago, 30 years ago. They're building everything everywhere. I'm energized by this country, by the kingdom. Okay, so when you're building things, everything you build, you need welding. Ships, roads, industrial products, machines, you need welding. Okay, and welding traditionally has been a highly analog endeavor. Okay, it takes a lot of experience. Okay, very difficult to automate. So a 20-year-old welder, doesn't matter how smart you are, it's very difficult for you to be as good as a 50-year-old welder. Okay, it just takes it's tactile, it takes experience, can't automate. But now we have new technologies, image capturing technology, and computing power, AI. So we make robots, we make tools that could make a 20-year-old kind of welder be as good as a 40-year-old welder. Okay, And welding is a very expensive, very costly. The salaries of a welder is very high, okay? So welding, AI welding, injects new technology and new value into a major manufacturing process, okay? Life sciences, okay, we talked about that, right? This is one of our companies. It's called Full Life, actually. It's nuclear medicine, okay? Nuclear medicine had a wave about 30 years ago. It didn't go anywhere, but now there's new data, new research that show how nuclear medicine could work to cure cancer. Okay, so it's like I put an atomic bomb in your body to blow up the cancer. Okay, very difficult to do. So we have companies at the forefront of that. Okay? Life sciences. Okay, Professor Gao is in AI biology, right? This is the kind of stuff we're in. Okay, 5 years ago, we started a company in Suzhou and in Boston. At the time, it was called computational drug discovery. Okay, now we know it's AI discovery, AI drug discovery. But at that time, there's no AI. We didn't have that concept. So if you go to our company, okay, if you go to a drug company, usually the scientists there are mostly chemists, you know, medical science, biology, right? But if you go to our company, half the scientists are physicists. Okay, of the remaining half of them are computer science majors, just like what you do, Dr. Gao does. So only a quarter of the scientists are biology and medical science. Okay, so they use physics, principles of physics and big computing power to speed up drug discovery and more accurately. Okay, so here,
chemical space is practically infinite. Imagine if you could explore this space by seamlessly integrating rigorous physics-based drug design, artificial intelligence, and state-of-the-art wet labs. TandemViz is the online collaborative platform for end-to-end drug discovery. Our platform enables you to rapidly navigate the molecular design space by utilizing generative AI and reaction-based enumeration. You can accurately assay the potency of small molecules using our FEP engine, powered by a novel sampling method and custom small molecule force fields derived from rigorous quantum mechanical calculations. Battle-tested on different target classes and multiple client projects, this engine is applicable to both small R-group changes and large core hops. Our dual machine learning and physics-based approaches enable a wide variety of unique workflows, including virtual high-throughput screening at billion level, accurate ADME prediction, and active learning FEP that increases the throughput of FEP by several orders of magnitude. This all combines to speed up dramatically the hit-to-lead and lead optimization stages of drug discovery. And because our platform integrates dry and wet, you can synthesize your molecules of choice with just one click. All of your data is captured in a user-friendly, collaborative workspace, so you can work alongside your project partners to analyze your computational and experimental results along multiple dimensions. By reinventing drug discovery infrastructure, Tandem AI aims to radically simplify and accelerate your discovery processes, helping you find your perfect molecule.
So AI drug discovery, okay? New material, these are brand new industries that are being started that didn't exist before. We have a company called, that does a geopolymer. It's a low, so I come to Saudi Arabia, like I said, I'm excited. You know, things are being built. You got Vision 2030, everything's being built. Okay, all that concrete. So I asked people, well, how are they making the cement? Where does the cement come from? Okay, all that cement. So of course I Googled. Sure enough, they're buying all the cement. All the cement making equipment come here from China. Okay, all cement. So of course you know, cement making is one of the most pollution producing, one of the most destructive things to the climate that you could do. Okay, because the process of making cement that contributes to 20% of China's total carbon emissions. Think about that, 20%. I mean, we're the biggest carbon emitter at the moment, not historically, not cumulatively. I don't want to make a big mistake here, but because we're so big, our economies, we emit a lot of carbon, 20% of it in cement. Okay, so this company has figured out a way to use industrial waste and turn it into cement, turn it into concrete, which makes cement making much, much more sustainable. Okay, so I think the kingdom should consider this, okay? Because you want to be environmentally conscious, you want to be sustainable. Okay? So supply chain technology, for instance, you'll be surprised, so many industries, entire global supply chain is in China. Okay? One example, this company, textile. Okay? China makes about 90-some%, 93, 94% of the world's textile. Okay? Only the most expensive stuff is still done in Italy. But most of stuff is done in China. But textile it's about $300 billion a year industry. Okay? But textile is highly complicated. There's very fragmented, very different. So this jacket and that jacket may look the same, but one could be 10x the cost because all that tiny little thing in the textile. Okay? So before that, it's very difficult to streamline. But this company, Baibu, they built this thing called Cloud Factory. So they put image capturing technologies and computational power in China's textile supply chain. Okay? So streamline the entire industry. Improves the efficiency of the industry, like the productivity that we talked about. Okay? Synthetic biology. That's another area. I don't know if KAUST has fields of study related to that. Okay? I think in the next 10, 20 years, synthetic biology will replace almost the entire upstream of our chemical industries. Okay? And China, of course, the biggest chemical producer in the world. Okay? We now rely on BASF, DuPont for the upstream stuff, but synthetic biology may replace all of them. And in itself, is what they produce, synthetic biology could produce is better, more efficient, and environmentally much, much more sustainable. Okay, will create new industries. Okay. So what does it mean for globalization? What does all that transformation that's happening in the Chinese economy have to do with the rest of the world? Of course, you know, China is the most globalizing power in the world. Okay. I just give you some statistics. We're the largest development lender in the world. Okay. In the last 22 years, we've provided $1.4 trillion in finance to 20-some projects, 165 countries, bigger than World Bank, IMF, Paris Club combined. Okay. Second, I said that before, China is the biggest trading nation in the world and in human history. No country has traded with other countries more than China is today in history. Okay, about 120 countries in the world, including Saudi Arabia, I believe, counts China as their top trading partner, #1 trading partner. I think for the US, the number is about 60, about half. Okay? We're also the biggest economic growth contributor. From 2013 to 2021, we contributed about 38.6% of global economic growth. That's more than all the G7 combined. Okay? And we got this Belt and Road Initiative. If you don't know about that, you should Google it. BRI, Belt and Road Initiative. We're building roads, airports, infrastructures everywhere in the world, mostly in the global south, of course. Okay? And what does that mean to this region, to this kingdom? Okay. We all know there's the big elephant in the room. I'm told not to go into politics. Okay, I won't. Okay. The biggest competition that's happening in the world. And in this kind of environment, neutral territory has an enormous advantage. Okay. So this is a major neutral territory. And you got to think about what you could do here in technology that can serve to further the goals of globalization instead of deglobalization. Okay? Expansion in trade and diversification. I know that the kingdom is pushing hard for, and adaptation and development in new technologies. And outside the few developed countries, we have this huge world called the Global South. And I think the kingdom is an important player in the Global South. And all these opportunities with China. China, of course, is the biggest Global South country and economy. With China in it, there are tremendous opportunities, business opportunities, economic opportunities. But all of these opportunities have a major scientific and technological component in it. So I'd like to end by saying that you, like me, I was lucky to get into finance 30 years ago, but I wouldn't advise my sons to get into finance now. Okay, I would advise them to get into your space. So you today, you're lucky because you're in the right place at the right time in the right fields of study. Congratulations. Thank you.
Thank you very much for the fascinating talk. I learned a lot from Eric's talk. So now we have time for questions. There are 2 microphones standing there. If you have any question, please feel free to walk to the microphone. So I got a question of, cost, as you said, is also in the process of being transformed into what we call cost 2.0.
Okay.
Where in addition to academic excellence, we are expected by our stakeholders to do a lot of technology transfer. So from the perspective of a very successful investor, what kind of advice and suggestions you want to give to our students and faculty members to start their own business?
So the only advice I would give is to think about commercialization on day one. Okay, and what we've been finding out, this has just occurred in the last few years. Okay, it used to be before from science to technology to business, it's a 10-year process. Now in many fields, it's a 10-month process. Okay, especially in your field, in biology and in computer science. Okay, these days, what's happening is from the day a paper is published, new data, paper is published in Cell and whatever. Okay, and if the stuff in that paper can be commercialized, 10 months later, 3 companies are born. Capital gets injected, 3 companies are born, and then there will be no chance for other players fast like that. Okay, so for scientists to connect with commercialization, connect with capital, and do it quickly is important.
Okay, so as you can imagine that the technologies coming from this kind of university is most likely high-tech technologies, which means the business will not make immediate profit in a very short period of time. So in this case, we probably need to convince the investors that we are worth being invested for a long time before we can make any.
Right. So it comes back to my first point, which is that in your research, in your scientific endeavors, you want to make sure that whatever you produce is going to be first in class in the world. No Me Too stuff. Me Too stuff will never get you very far right now. I mean, before, there are a lot of Me Toos you could be very successful in, not anymore. So you want to be first in class by DNA. And my team, our firm, when we look at life sciences, for instance, okay, we want to say that the bar is that we will only invest in an opportunity if that opportunity could be successful if technology is the only barrier to entry. If you got no other barrier, you don't have a CEO, you don't have market, you don't have whatever, distribution channels, whatever it is. If you got nothing else but only technology, just by that barrier alone, you can be successful. Then we will do it. If you need anything else, we won't. Okay, so just I think we'll focus on the first in class, the most advanced stuff.
I see. And in your opinion, what will be the hottest directions in the next 5 to 10 years?
Like I said, I think I like synthetic biology, or biology engineering, whatever you call it. Okay, it's a bit early, But I think 5 years, we'll see some major advances in that space. AI, of course, but AI has got wide applications. A lot of people are doing it, so you better find something unique, you know. And more practically, like if you use brand new technology like AI to improve industrial capacity, productivity, I mean, that I think is the most direct.
I see.
And new materials, of course. Green technologies.
Yeah.
Yeah.
And we got some questions from there.
Yes. You mentioned the Road and Belt partnership with many countries. I wanted to know if you know what kind of exchange is it? So what China gets in exchange, and why many countries choose China instead of the World Bank? So where is the advantage for countries to talk to China instead of other entities? Thank you.
Well, firstly, China has a lot of capital at the moment, more capital than World Bank. And the Belt and Road Initiative is driven primarily by I believe by China's desire to continue globalization. Okay, so like I said, there's huge trends to reverse globalization, and China cannot afford that because largest trading nation in the world, highly integrated into the global economy. So it realizes it can no longer rely on the markets of the developed countries in the US and Europe. It must expand the development into other areas in the global south, okay, which is much bigger than the West. But if they don't develop, China can no longer grow its own economy. And in order to develop, these countries need to build infrastructure. Okay, there's an old saying in China called, if you want to get rich, build a road first. Without roads, without infrastructure, without digital infrastructure, you can't develop. So in order for China's own industries to further develop, because we got 1.4 billion people, our income per capita is still not high. So we need to further raise that. We need to do more integration with the global economy. And the rest of the world, outside the Western countries, need to be more prosperous.
Hi, thanks for the talk. It was interesting. At the beginning, you said one of the key problems facing, big tech, but also, I guess, China in general, is inequality and a large wealth gap. But then also later in your talk, when you were talking about the implementations of AI, they were largely sort of about job replacement implementations. So my question would be, how do you expect the economy to grow if these technologies' impact is largely to increase profit margins, and then you have the large majority of the population that's not getting a large income to spend and invest in your own economy in China?
Yeah, good question. So we need the improved profit margins going to institutions like KAUST, or China's KAUST. We got many of them. Dr. Gao graduated from one of the best, okay, the best, okay? So what we need to be engaged in is education and training. We need to change the skill sets of entire generations so they're involved in value-adding economic activities, higher value-adding economic activities instead of the lower value-adding that will be replaced. And what replaces these things, the low value-add activities, will produce better products, better services. But we need to invest so that these people are not left behind. That's what we got to do. And I think, China certainly is investing a lot in education, but it's a difficult process. But it's something that it's hard not to crack. But this is the purpose, of the government and of the entire society.
Thank you for the interesting talk. I found it very fascinating how economy really changes some behaviors from companies. You mentioned at the start the issue of deglobalization, and part of it, I think, is like how the economy is currently structured. It's predominantly profit-based. So if you're not getting profit, then it's not a good issue. It's not a good choice to do it. And like when I'm thinking about it, I think about science. When we are thinking about science, it's mostly about collaboration, about global interest rather than just specific interest. On the contrast, in economy, it's mostly competition-based. You are looking to, it's like sometimes even it's as toxic as destroying other companies, taking them down. So do you think like this idea will still persist on with the current state of economy and will like persist in the future, or are we getting more aware of this issue? Thank you.
Well, I mean, that's an age-old problem, you know. It's the issue about externalities that I talked about, right? So what we gotta, I mean, maybe an institution like KAUST should study this, okay? How do we design economies and societies so that private behavior is conducive to collective gain instead of the opposite, okay? And the opposite is happening a lot. I mean, I think especially in capitalist societies. China is a socialist country. Okay, so we have market-driven behaviors, and these companies are chase after profit. But the country itself is socialist. So we have I'm using the term loosely. We have a redistributive power to adjust the incentives in our society. It's not always done perfectly. Okay, a lot of problems. Like I said, there's inequality. But in a purely capitalist society, it's much harder because the social structure and political structure is made to support the kind of behavior you talk about. Okay, so I think it's kind of thing that I love. I mean, it's a great question. I mean, I think people who are studying science and technology should be aware of, should be thinking about.
One more question there.
Hello. Thank you very much for your talk. In the beginning of your talk, you mentioned the smile curve and how the PRC is trying to move to the upper left of the curve. And that makes sense because you're trying to do a lot of R&D and less of the middle of the road work. But wouldn't it also make sense to move towards the upper right of the curve where the profit margins are higher?
Yes, well, absolutely. So, but I think in order to move to the upper right, we got to first get to upper left, investing. Otherwise, we don't have the capabilities to capture that value. I think, yeah, you're right. I mean, they're consistent with each other. So, thank you. Yes. Where are you from?
Hello, thank you so much. I'm from Russia.
Oh, great.
So, I have a question about real working experience. What do you think? Is it a barrier for maybe students or scientists here who hasn't real working experience in technologies companies to create their own here in KAUST, for example?
To create their own companies?
Company or like business here.
I would encourage, like I said, okay, before the distance between science and technology and business are long, now it's shrunk, okay, it's short. So I wouldn't worry about it. If you're interested in commercialization, if you're interested in making your science valuable in the real world, do it now. And find partners, find other resources that can combine their resources with you. Don't worry about not having these resources. I mean, we were talking about maybe doing something at KAUST to improve commercialization of R&D. Okay, so we want to do that. I mean, I think given the quality of the research, the quality of the work that's being done here, the academic work being done here, you'll be able to attract a lot of resources to this institution. So I wouldn't worry about it. Just getting on the act.
So you think that creation today is important than, for example, working in technology company?
It will be fine to work in a company if you don't have anything that you feel that could make a big difference. But what I'm saying is, if you feel you have something, act on it.
Okay, thank you.
Okay, so if no more questions, let's thank Eric again for the wonderful talk and for making all the efforts for this short visit.
Thank you.
And on behalf of House and Web, we have a small gift for you.
Great.
So it's an astrolabe.
Wow.
And by accepting this, you agree to visit us back and to invest in us.
Yes, beautiful. Thank you. Thank you.